Okay, so you've made some money and you want to invest it. And so, how do you pick the stocks that are going to give you a good return and enhance your wealth? Well, I think the first thing I would ask myself is, if I were buying a company in my community, what are the parameters that I would be looking for to invest my extra money into that company? Well, I want to be in an industry that is growing, not an industry that is dying. So, okay, what's the most growth-oriented industry right now? It's artificial intelligence. I don't think anybody would argue that point with you. Okay, so I want to buy an artificial intelligence stock. Okay, with that in mind, what's my next parameter? I would think I want a company who is growing, whose revenues are growing, and who is making profit. And because if they're making profit, that profit will either be returned to me in the form of dividends or growth in price, which will increase the value of my investment. So I've got to look for a company that is growing in revenues and is making a profit. If I can find that and it's in artificial intelligence, I've probably got a pretty good chance of making some money on it. So how do I do that? I start with fundamentals. That is, are their revenues growing quarter to quarter, year to year? Are they in a good industry? And are they making money at what they do? Is that available to me? Yeah. It's available. It's in their financials. You can either go to their website and look at their quarterly report and extract those numbers, or you can go to somebody like Seeking Alpha that has all of them, and you can sort through them. Now, what I've done is taken that data and put it on spreadsheets. I choose to use Google Sheets because I can put formulas in. So as those numbers change, my chart updates. Let me take you and show you what I've done and how I've segregated out the best AI stocks that I see, and then how I analyze them, and maybe you can learn from it, and maybe you can become a better investor. Or maybe you can just join my tribe, my group of people who feed me information and say, consider this stock, watch this video. And so that's how I create what I do. And then I share that with you on my BUS portfolio website, Best of Us Investors. So let's get into it. Let me show you how I pick AI stocks that are going to outperform the market. That's our goal. Outperform the market. But I need to share with you, this is not financial advice. No. This is Kerry Grinkmeyer. Who is he? Well, he is a retired financial advisor, has his CFP, his CHSE, and his CLU, and he's sharing his knowledge because this is what he enjoys doing. I'll talk to you more right after this disclaimer.
Best of Us Investors presents Kerry Grinkmeyer.
Okay, this is the chart as I have moved it over to the website, and I want to explain to you how I use it. I basically have entered the tickers of all of the stocks that I have in the BUS 12 and BUS 13 portfolio. These I've got are stocks that I'm considering putting into probably the BUS 12 portfolio. But what I've done, and let's use NVIDIA as an example. This price will change as we sit here because this is a live price. This is the number of shares I own. So this is the value as of today. They, in their last report, proposed that they were going to have earnings growth of 224% between now and this time 2024. So that would say that my portfolio would grow from 36,000 to 117. Then that would be followed the following year by 44% and 28%. And you can see that over the 3 years, it is estimating that this stock will grow by 497%. Well, I've done that then for every stock that I have in the portfolio. And what this is doing is basically saying, yes, AMD is in fact a good stock, even though it's down right now, but their earnings are projected to be 52%, 27%, and 27%, which will give me 145% return. But then if I drop down here and I look at Apple, They're projecting that their earnings will go down 1% in 2024, 8, up 16, giving me a 24% return. Now, I can do this for any stock I want to consider, such as these are some that from a call that I listened to on NVIDIA, they are saying they're doing business with Snowflake. Well, Snowflake is selling at $149, and if I bought 100 shares, that would be worth $14,000, and Snowflake says their earnings will go up 176% between today and this time next year. That would give me a good growth from 14,000, I'll call it 15 to 41,000. Then they're saying their earnings are going to grow by 50, 65. So I would get a 585% return. So where would that rank? Well, that would make it the second best stock that I own. So now the question becomes, let's look and see, how is Snowflake trading? Is it near its 52-week high? Is it near its 52-week low? And where should I buy in? Okay, to give me an idea where I should buy into a stock, and I'm going to use Modine Manufacturing. This is a company I'm trying to buy for my Bus 12 portfolio. It creates the air conditioning, the air cooling systems that are used in data centers. And as you can see, it has had a tremendous run-up since here in May 24th of 2023. And it has gone from $19.72 to where it's trading today at $46.79. So what I've done is I've put in a predictor, an indicator. It's called the Fibonacci retracement, which basically says that over history we have learned when a stock gets a run-up like this, it usually retraces its path and retraces it somewhere between a 50% correction to a 78% correction. And you can see here, it's saying the 50% correction would bring that price down from 46.79 to 33.69. So that gives me some indication. The other thing I want you to see is this green box here is a gap. In other words, the stock was trading here on July the 11th, and it gapped up on to July the 12th and left a gap. It did the same thing here again on August the 2nd and went up substantially and then created a gap. Part of that gap was then filled here on Friday, August the 18th, but this gap remains. What that indicates is that stocks, for the most part, cover their gaps. That is to say, if it leaves a hole between the candles here, that eventually that will come down and close that gap. That's not down near where the Fibonacci would be, but that tells me that if I want to get into this stock, into Modine, probably what I should do is put in an order for half of what I want to buy it at, somewhere here around $38.60, and then be patient and maybe put in then a follow-up order for the other half of what I own at $33.10. That's using technical analysis. This has nothing to do with their earnings, has nothing to do with their revenues or the management of the company. This is saying that history tells us through technology and through technicals that stocks retrace themselves. And this, we've got to say, is a tremendous run-up. So I'm confident it will probably fill that gap, but so that I gain some holdings in it, I'll only put half of my order in at the 38.37. So that's how I buy stocks, and this is how I manage my portfolio. I'm going to put this in the Platinum section of our website, because what I'm also going to incorporate into this is the help of Mark. I'm going to have Mark go through each one of my stocks and say, okay, this is my recommendation, not only based on this technology, but this down here as well. This is your MACD, this is your Scholastic. These are other indicators that give you a more short-term perspective. Is this stock trade going to, on on the shorter term going to be trading up, or is it going to be trading down? What that will give me, once I am a holder of the stock, is more indication: should I buy, should I hold, or should I sell if I have a short-term opportunity? That's what I'm trying to do. That's what I want to offer you. As I said, this will be part of our Platinum presentation. That goes for $60 a month. And why is that? Because I'm paying other people to help me make better decisions, and I'm passing that on to you as good and valuable knowledge that you can help me pay Mark and the other staff that I'm bringing on to make you a better investor.